else do we need to know about investing in real estate? Maybe with your clients specifically, some of the, maybe the warning signs that people need to know before they're jumping in. Or when it
Before we
comes to
dig,
taxes, like when it comes to their, their record keeping and things.
before we do that, before
Yeah.
we go back, so we talked about the real estate professional who can take advantage of the tax code.
Yes.
That's what was that? That was 750 hours or more, plus more than 50% of your total activity. Either you do it or your spouse does it. As long as one of you do it, you qualify automatically as real estate professional and you can deduct the big losses. The second one was in my client's example, when they bought the property for their own business use, called a self-rental. You do not need to spend 750 hours. You do not need to spend more than 50% of your total business activity within real estate. You qualify automatically as long as you use it for your own purpose, for your own business. That was the second one. Now, third one, which is even easier to qualify for, you do not need the 750 hours. All you need is 100 hours or more. And it does not need to be more than 50% of your total activity. And it does not have to be self-rental. So now, what could it be? Short-term rental. Short-term rental properties are qualified as active businesses. So if you have a short-term rental, what are short-term rentals? Airbnb. Basically, if you have an Airbnb property where you rent it out for a short-term period, and a short-term period is 7 days or less per tenant in average. So if you have tenants staying at your short-term rental property who stays there less than 7 days in average, some might be 7, 8, 9, 10 days, but other ones are less than that. So as long as the average is less than 7 days per tenant, that qualifies as a short-term rental property, and you can deduct the entire amount the same way we explained in the two different examples. You can take the bonus depreciation, you do a cost segregation study, bonus depreciation, wipe out a lot of income.
Wow. It's passive
Now,
income too.
well, that's passive income.
Yeah.
But you offset that against those losses against active income. So you have W-2 income, you have business income. In my case, my attorney has millions of dollars in business income. So that $2 million loss from the real estate offset the $2 million in business income they had that year. They had more than $2 million income because they make a lot of money, but $2 million just disappeared and they saved about $1 million in taxes.
Wow. That's incredible.
So 3 ways, right? We learned 3 things today. You can qualify to deduct your real estate losses in 3 ways. Short-term rental, less than 7 days per tenant in average. Self-rental, which is if you buy commercial property and your business occupies it, or if you're a real estate professional spending more than 750 hours within real estate and more than 50% of your total business. Either you or your spouse. Doesn't matter which of you qualify.
So great.
There you
Such
go.
great advice.
A lot of tax savings. A lot of tax savings.
Oh my goodness. It's a busy time of the year for you guys.
It is. And we are implementing a lot of that. So we did the planning last year in October, November, December with all this real estate and all the cost segregation studies. And now we're implementing this in the tax returns and seeing the result. Well, we knew the result because we've done the projections, we've done the tax planning. So our clients have seen what these properties could do for them. But now we're filing the returns, and they're actually seeing that it was not BS. It was true, and the tax return shows it.
Your clients are happy with you. I love that.